Should you still buy mutual funds? Jason Zweig of the Wall Street Journal will help you figure that out. Hi, Jason. How are you?
Hi, Howard. Good to be with you.
Jason, you've written about mutual funds for many, many years. And once again in 2008, about 60% of actively managed mutual funds underperformed the broad market indexes, which did pretty badly too. I mean, is it time to give up on actively managed mutual funds?
Well, that's a really good question, Howard. And it's one I've been thinking about for at least a decade. You know, what I used to argue is that an actively managed mutual fund where you have a human being picking the best stocks and avoiding the worst ones had a selective use, which is that's good for you if you can identify with that manager. If that person has a worldview that's similar to yours, and you can say, I think about investing the same way this person does. I'm comfortable with him, I trust him. And that might help you get through a bear market like what we've been through the past couple of years. I'm no longer quite so sure that's true. If you look at what happened with Bill Miller at Legg Mason Value, so many of his investors deserted him.
Disaster.
And rightly or wrongly, which is a story for another day, but they didn't stick with the person they felt was sympathetic to their worldview.
Well, we've also seen Chris Davis, great investor, blow up. We saw a CGM Focus, Ken Hebner, who had been a fabulous performer. I mean, suddenly, when commodity prices fell, blew up. Mm-hmm. I mean, it seems so unpredictable that these people can be flying so high, literally for years. Suddenly, a bad market turns against them, boom.
Well, there are a couple really important lessons here, I think. The first is you never should invest too much of your money with one manager, one style. Don't stake a lot of your money on one bet. The second thing is look at the team. If that manager that you love gets hit by a bus, you want to know that someone else is there who can manage your money just as well. And the third lesson, I think, is that you can always buy an index fund, and in my opinion, you should. And an index fund, like a total stock market index fund, should be your core holding. And if you then want to include an actively managed stock fund or pick your own stocks on the side, more power to you. But make that where you put most of your money so that
the index fund.
The index fund. So that if you get it wrong on the actively managed fund or your own stock picks, the index fund will at least give you the market return.
Thank you very much.
Great to be with you, Howard.
We've been speaking with Jason Zweig on the MoneyShow.com video network.